Which high-yield dividend stocks should you buy during recession? Recessions typically force businesses to cut back. They lay off employees. They postpone capital expenditures, and they save money and cut expenses. Dividends, on the other hand, are usually sacred. Investors, particularly small business owners, rely on them, and corporate boards are hesitant to reduce, let alone eliminate them, even during economic downturns such as the one predicted by many forecasters. Today's video discusses some of the high-yield dividend stocks one should buy during a recession. Make sure to watch until the end of the video and subscribe for more. Here we begin. Dividends aren't a magic bullet for getting individual investors through an economic or market downturn, but dividend-paying stocks can help. Stocks dividends have been durable in most U.S. recessions dating back to the 1940s, easing some of the pain investors have felt as their portfolios have taken a hit during the market downturns that tend to accompany recessions. Dividends signal that management teams have confidence in the business's sustainability and that they will have the cash flows to pay the dividend, he adds. Of course, recessions vary in length and cost. For example, consider the 2-month economic contraction from February to April 2020, when the pandemic caused much of the U.S. economy to shut down temporarily, and GDP fell by 1/3. That year, 42 S&P 500 companies suspended dividends and 28 cut them. While many layoffs came from companies most affected by COVID lockdowns, Snyder notes that 2020 was particularly extraordinary in the speed with the economy shut down and corporate cash flow slowed. Then there was the recession, which lasted from the late 2007 to mid-2009. According to Goldman Sachs, the S&P 500 dividends per share fell by 24% during that period, the worst result of any U.S. recession since the late 1940s. According to S&P Dow Jones Indices, 22 S&P 500 companies suspended dividends in 2008 with 40 payout cuts. However, as the subprime mortgage crisis ravaged the economy, many dividend cuts were made by banks and other financial institutions. For example, Citigroup reduced its quarterly dividend from $5.40 to $3.20 per share in early 2008. During the recession, it was reduced twice more before being suspended. The bank did not resume paying a quarterly dividend of a penny per share until mid-2011. Although the recession was associated with the burst of the tech stock bubble, dividend cuts extended beyond tech stocks, partly because some of the sector's big names weren't even paying dividends at the time. Microsoft or MSFT didn't start one until 2003, for example. So, as recession predictions grow louder by the day, what now? One of the researchers has compared dividend-paying S&P 500 stocks to those that do not pay one in every recession since the mid-1970s. He observes that as the recession approaches and during the early stages of the contraction, dividend-paying stocks tend to outperform non-payers. During periods of market declines, dividend stocks tend to be more stable and decline less, Clissold says of stocks that do not pay dividends. Because markets tend to outperform the economy, stocks generally tend to peak 5 to 6 months before the start of a recession. However, as a recession continues and better economic times appear on the horizon, dividend-paying stocks lose their performance advantage to non-payers, as markets begin to price at the end of a recession, according to experts. Another factor to consider for investors is that there are various types of dividend stocks to consider when preparing for an economic downturn. During a recession, the market turns its attention to businesses that it believes will be more stable and protected, according to an expert. Here are some of the high-yield dividend stocks to buy during a recession. Number 1. Costco Wholesale Corporation. Costco Wholesale Corporation is an American multinational corporation that operates a retail store chain. As of August 3rd, the stock had gained 24.9% in the previous year and 247.3% in the previous 5 years. During the 2020 recession, Costco Wholesale Corporation increased its net sales by 9.3% to $163.2 million. Net sales increased 20.4% yearly to $22.7 billion in June of 2022. In fiscal quarter 3 of 2022, it generated $373 million in free cash flow, up from $322 million the previous quarter. Costco Wholesale Corporation also has a strong dividend history, having raised its dividends for the past 18 years. It currently pays a quarterly dividend of $0.90 per share for a 0.66% yield. In July, Deutsche Bank upgraded Costco Wholesale Corporation to buy with a $579 price target, describing the company as one of the group's strongest and most consistent operators. Costco Wholesale Corporation was owned by 61 hedge funds in Insider Monkey's database at the end of quarter 1 2022, up from 57 a quarter earlier. These stakes are worth more than $5.4 billion in total. In addition, Fisher Asset Management was the company's largest shareholder in the first quarter, owning over 4 million in shares. Costco Wholesale Corporation, like the Coca-Cola Company, Johnson & Johnson, and ExxonMobil Corporation, provides strong dividend credentials to income investors. Number 2. The Procter & Gamble Company. The Procter & Gamble Company is a consumer goods company that sells everyday use products. In July, the company reported fiscal quarter 4 2022 results, generating an operating cash flow of more than $16.7 billion with an adjusted free cash flow productivity of 93%. Furthermore, it returned $19 billion to shareholders in FY22, with $8.8 billion paid in dividends. At the end of the fourth quarter, the Procter & Gamble Company had more than $7.2 billion in cash, with total assets totaling more than $117.2 billion. The Procter & Gamble Company has one of the longest records of consistent dividend growth, having increased its dividends for the past 66 years. As of August 3, it paid a quarterly dividend of $0.9133 per share for a yield of 2.57%. Following the release of the company's fiscal quarter 4 2022 results, Barclays set a $154 price target on the Procter & Gamble Company, while maintaining an overweight rating on the stock. In Q1 of 2022, the Procter & Gamble Company saw an increase in hedge fund interest, with 72 funds in Insider Monkey's database owning stakes in the company, up from 67 a quarter earlier. These stakes are worth more than $6 billion in total. GQG Partners was the company's largest shareholders, holding approximately 10 million shares. Moving on to number 3. McDonalds Corporation. McDonald's Corporation, a fast food corporation, successfully survived previous recessionary periods, reporting a 7% increase in global same-store sales in 2008. The stock has also provided positive returns to shareholders, increasing by 69.7% over the last 5 years. McDonald's Corporation generated more than $1.7 billion in free cash flow in Q1 of 2022, while its operating free cash flow was $2.13 billion. During the quarter, the company's global comparable sales increased by 11.8%, reflecting positive comparable sales across all segments. In addition, McDonald's Corporation has raised its dividends for the past 46 years in a row. As of August 3, it pays a quarterly dividend of $1.38 per share and has a dividend yield of 2.11%. RBC Capital raised its price target on McDonald's Corporation to $305, citing the company's quarterly earnings, and assigned the stock an outperform rating. According to Insider Monkey's Q1 2022 database, 58 hedge funds own shares of McDonald's Corporation, up from 57 the previous quarter. The total value of these stakes was more than $2.73 billion. Next on the list, Dollar General Corporation. Dollar General Corporation is an American retailer that opened over 1,000 new locations during the 2020 pandemic. As of the market close in August 2, the stock had gained 6.4% since the beginning of 2022 and 6.62% in the previous year. Dollar General Corporation generated nearly $168 million in free cash flow in Q1 of 2022, while its operating cash flow was $450 million. During the quarter, the company paid out more than $125 million in dividends, indicating that it had enough cash flow to cover its dividend payments. Dollar General Corporation's quarterly dividend is $0.55 per share, which was increased by 31% in February. This was the company's 7th year of dividend growth in a row. Oppenheimer raised its target on Dollar General Corporation to $275 while maintaining an outperform rating, praising the stock's performance in 2022 as it outperformed the broader index. Insider Monkey tracked 53 hedge funds with stakes in Dollar General Corporation in Q1 of 2022, up from 44 in the previous quarter. These hedge fund stakes are worth more than $2.25 billion. And with that, that's where we end this video. So, what do you think of these stocks? Let us know in the comments down below. Thank you for watching. Don't forget to like, subscribe, and comment for your thoughts.